Welcome back to Investing Talk podcast.
Great to be here.
Today we're focusing on Kenvue, a really big name in consumer health. We're working from some materials you shared.
That's right. We've got recent news updates, a pretty detailed due diligence report, and an analysis looking at the company as of April 2025.
Okay.
And the idea really is to pull out the key insights from all this, give you a solid picture of where Kenvue stands right now and what might be next for them.
Sounds good. So we'll unpack some recent positive developments, look at how the stock market's reacted, analyst views,
Right.
then maybe the broader industry context, risks, opportunities, definitely their financial health, strengths, weaknesses, what management's saying, and how they stack up against competitors.
Let's get started then.
Okay.
So first off, some positive news. Kenvue declared a quarterly dividend. It's 0.205 cents per share.
Okay, a dividend declaration. When's that payable?
Payable May 28th. For shareholders on record as of May 14th, so fairly standard timing there.
And the other potentially bigger news was this partnership with Microsoft, announced April 16th.
Yes, a 5-year deal. And this one's interesting.
What's the core idea behind it? AI, I believe.
Exactly. They're planning to integrate AI tools, things like predictive analytics, generative AI, embed them right into their digital operations. The goals they've stated are, well, enhancing product development and boosting customer engagement.
So not just using AI generally, but really weaving it into how they operate.
Now, that seems to be the plan. I mean, think about it. Potentially faster innovation cycles, maybe more personalized products hitting the shelves quicker, if they execute it well, that is.
Right, execution is key. And is this sort of thing common now in their sector?
It's definitely becoming a trend. Kenvue's move here lines up with what we're seeing across consumer health.
Okay.
Companies are really exploring how AI can help tailor consumer experiences, make supply chains run smoother.
So this puts pressure on the competition, like Haleon, Bayer.
You'd think so. They might feel the need to step up their own tech game, adopt similar strategies to keep pace.
Interesting. So that's the potential future. How did the market react to all this recently? It seemed a bit choppy.
It did. The stock had a decent run, up about 12% over the 3 months before April 21st. Probably optimism about efficiency gains.
But then
on the 21st, it took a pretty sharp intraday tumble. Fell almost 5%, down to $22.23 before bouncing back a bit.
Any idea why the sudden drop? Was it company specific?
Hard to say definitively from the sources. Could just be profit-taking after that run-up.
Makes sense.
Or maybe broader market jitters playing a role. It wasn't necessarily isolated just to Kenvue.
Okay. And the analysts watching the stock, what's their take? Are they, all over the place like the price was that day?
Their sentiment seems mixed is probably the best word.
How so?
Well, there's definite enthusiasm for this Microsoft AI partnership. They see the potential there for innovation, efficiency, but that's tempered with some caution, particularly around regulatory risks that still linger.
Ah, risks. Let's talk about those. What's the main one being flagged?
The big one is an ongoing securities fraud lawsuit.
Okay. What's that about?
It alleges that Kenvue made misleading statements about FDA proceedings concerning phenylephrine effectiveness.
Phenylephrine, right, the decongestant.
Yes. And this relates to the period around their IPO, May to September 2023. Even though it stems from their time under J&J, it's now Kenvue's issue to deal with.
And the risk there is?
Well, potential damage to investor confidence, obviously, legal costs. It just creates uncertainty that could weigh on the stock.
Bit of a shadow. Okay, turning to the upside, then the opportunities.
The Microsoft collaboration is definitely front and center there.
We talked about product innovation.
Right, accelerating that.
Yeah.
But also enabling smarter retail strategies using data.
Like what, specifically?
Imagine using algorithms for inventory management, predicting demand much more accurately. That could improve margins, maybe noticeably in the second half of 2025.
So, better forecasting, less waste?
Potentially. And using generative AI to, say, quickly test new product ideas based on real consumer insights. Lots of potential if harnessed correctly.
Got it. Let's pivot to the financials. How are they looking based on the latest reports?
Okay, so for the full year 2024, net sales came in around $14.7 billion.
And the most recent quarter, Q4.
Q4 net sales were $3.7 billion. Now, that was actually down slightly, 0.1% compared to the year before.
Down, but I thought there was growth.
Ah, good point. Their organic sales, which strips out the effects of foreign currency, did grow by 1.7% in Q4.
Okay, so currency fluctuations were a drag.
Exactly. It highlights the impact that can have on a global company's reported numbers.
And profitability, earnings per share.
In Q4 2024, the reported diluted EPS was $0.15. The adjusted figure, which often smooths things out, was $2.26.
How did that compare to expectations?
The sources suggest they actually met their profit commitments for the quarter. So even with that slight dip in revenue, they managed the bottom line.
Okay. Disciplined on costs, perhaps? Now, valuation. This is always key for investors. How's Kenvue looking?
This is where it gets quite interesting. Their trailing 12 months PE ratio, price to earnings, was sitting around 43.77 in early 2025.
43.77. That sounds high.
It is, relatively speaking, especially compared to the broader consumer health industry average, which is typically more in the, say, mid to high 20s.
So what does that high number tell us?
It strongly suggests the market is baking in expectations for pretty strong future growth, or maybe assigning a premium for those brands.
So higher potential reward, but maybe higher risk if they don't deliver that growth.
That's usually the trade-off with a higher multiple, yes.
What about other metrics? Debt.
Cash flow?
Their debt-to-equity ratio is around 0.90. Moderate leverage, not excessive.
Okay.
The price-to-free cash flow ratio is roughly 33.84. And the price-to-book ratio is also elevated, around 4, or even a bit higher. Again, points to that premium valuation.
But they do pay a dividend. Yes, and the yield is actually quite decent, around 3.45%. Yeah. That provides some income return for shareholders.
Right. So beyond the numbers, let's talk about the actual business. What are Kenvue's core strengths?
Oh, the brands. That's number one. Inherited from Johnson & Johnson.
Yeah, huge name.
Absolutely. Tylenol, Nicorette, Zyrtec in self-care, Neutrogena in skin health and beauty, Listerine, Band-Aid in essential health. These are household names globally.
That recognition must be invaluable.
Immense value, plus that vast global market reach they already have. And, as we mentioned, their commitment to growing the dividend is also a definite strength.
Okay. On the flip side, what are the main weaknesses or challenges right now?
Well, we touched on that slight revenue decline in Q4 2024, the 0.1%. That actually missed expectations slightly. And their adjusted EPS, while meeting estimates, was down year over year from $0.31 to 26 cents.
So some pressure there.
Yes. And those currency headwinds impacting international sales remain a persistent challenge they have to navigate.
What's the view from the top? What's management saying and doing?
CEO Thibaut Mongon is really emphasizing disciplined capital allocation, being smart about where they spend money, and generating durable, reliable cash flow.
Any specific initiatives?
Yes, they've launched a cost-saving program called Our View Forward.
Catchy name. What's the goal?
Aiming for about $350 million in annual savings. Streamlining operations, basically.
And their outlook for 2025?
It's pretty cautious, actually. They're guiding for full-year revenue growth somewhere between -1% and +1%.
Flat to slightly down or up? Reflects uncertainty.
Seems so, citing those broader macroeconomic uncertainties we're all seeing.
Right. Lastly, how does Kenvue stack up against peers, like Procter & Gamble or Reckitt Benckiser?
Compared to giants like those, Kenvue's PE ratio, as we noted, is significantly higher.
But the dividend?
The dividend yield is generally more attractive than many competitors, so you have this higher valuation potentially reflecting post-spinoff growth hopes. But it really puts the pressure on them to deliver strong organic growth to justify that multiple.
Okay, so let's try and pull this all together. It sounds like Kenvue is a bit of a mixed bag right now.
I think that's a fair assessment. You've got this newly independent entity, but with incredibly powerful established brands. That's a huge plus.
And they're making forward-looking moves, like the AI partnership with Microsoft. The dividend's solid, too.
Definitely positives.
Yeah.
But you have headwinds. There's the ongoing litigation casting a shadow.
Right.
There's been some recent softness in revenue growth, and that valuation is, well, demanding.
So success really hinges on
how well they execute on that AI integration, how effective these cost savings from Our View Forward actually are. Those will be critical things to watch.
What really strikes me is that tension, the old school power of their brands versus the need to innovate fast in today's market.
Exactly. That Microsoft deal is a very clear signal they intend to embrace technology. Could be a real differentiator if it pays off.
It's a fascinating story to follow.
Absolutely. We hope this discussion has given everyone listening a clearer, more rounded view of what's happening with Kenvue. It's just one snapshot, of course.
Things change fast.
They do. So Keep an eye on their performance, especially progress reports on the AI stuff, and any updates on the regulatory front.
So what aspects stood out most to you listening in? Does this raise any new questions for you about Kenvue or the sector? We'd love to hear your thoughts. Please leave a comment below.
Yeah, let us know what you think.
And if you found this conversation helpful, please do subscribe, give us a like, and share it with anyone else who might find it interesting. Thanks for joining us today.